Welcome to another episode of Equity Mates. My name is Bryce, and as always, I'm joined by my equity mate, Ren. How are you going?
I'm good, Bryce. I'm good. We've made it through another week.
Yes.
Big week in markets. Big week on Equity Mates on AusBiz.
Yes.
We've had some great guests.
We have.
We've learned a lot.
We have.
But
That's why we're here.
Now it's just the two of us. No interviews today.
No interviews, yes. We are here to unpack some of the, more interesting news articles that have caught our attention over the last week or so. Nothing sort of day to day, but more bigger picture stuff, and because that's what we're all about here at Equity Mates.
Yes. And we are, I guess we should say, we're calling this Thought Starters.
Thought Starters.
We will call it Thought Starters. And we should give a shameless plug that if you want to read these two articles in full, or any of the other news articles that have caught our eye in the past week, you can sign up to our weekly emails. Equity Mates Thought Starters comes out every Monday morning. Best email you receive all week.
Yes.
But we're going to talk about two of the stories that we've featured on this week's Thought Starters email.
That's right. We're going to be talking about Howard Marks, one of his latest memos. Loves a memo.
Loves a memo. He's known for his memos.
Yes, well known for his memos. We've spoken about one of his memos not too long ago. And we'll also be talking about the auction that kicked off the deep learning revolution. So I guess, as all things in Silicon Valley and markets, if you throw in deep learning or AI into your business plan, it can mean a lot of good things.
Forget Silicon Valley. Like every company from bloody restaurants to retail these days will have some mention of AI and machine learning, deep learning in their investor presentations.
So we are going to go back and have a look at how that all started. But Ren, let's start with Howard Marks and one of his latest memos, which was his outlook for 2021. With a bit of a preamble as to what happened in 2020. And for those that are unaware, Howard Marks is the founder of Oaktree Capital, and one of the, largest hedge funds in the world, or distressed, debt funds in the world. Very well known. And we do suggest going and having a read of many of his memos because there's a lot of insight, but we're going to focus on this.
I would say, this might be a big call, but stick with me. Okay. I would say after the Warren Buffett letters, Howard Marks' memos are like second on the investor writing power rankings.
Oh, big time. Yeah. Third is the Thought Starters email.
It's close there.
Third. I actually enjoy reading Howard's a little bit more than Warren. I think Warren at the moment is kind of just sticking in a pretty straight line, and Howard's been obviously giving a lot of thought to some things. Not that Warren hasn't. But
and Warren Buffett, if you have been giving thought to things, come on the show and prove us wrong.
Share it. Yeah.
But so Howard Marks wrote this memo about his outlook for 2021, and we're in March, so
I know, bit late.
Come on, Howard. But I think it was the reason we're talking about it today. The reason we included it in our Thought Starters email was there's a lot of chat these days about where the market's going, how's it positioned, and we haven't been investing for that long. But I would say in the time that I've been investing, I've never seen more divergent views on the economy and then financial markets.
Yeah. On
one hand, JobKeeper is going to collapse, the JobKeeper will stop and the economy will fall off a cliff. And on the other hand, there's so much pent-up consumer spending and there's so many green shoots in the economy and things are looking good. And it is really hard as a retail investor to try and navigate it all. And I think Howard did a pretty good job of arguably, sitting
not
on the
saying
fence.
A lot,
but I think he did a good job of summing up where we're at.
Yeah.
Now, we're generally pretty positive here at Equity Mates. We like to be optimists. I think
it's our fourth rule.
To be a good investor, you have to have a bit of an optimist in you.
Well, unless you're a perma bear.
Yeah, or unless you're a short seller and you're cynical about everything. But let's start with the positives. So he unpacked, the bull case for 2021 and beyond. What were some of the things he wrote about?
So this is the bull case for markets. Well, we obviously started by talking about the overall general health of the economy. And what we're seeing over in the States is certainly, a rise in general economic output and the effect that that's having on consumer confidence and also business confidence as well. I think he's overwhelmingly sort of happy with the way that the economy is performing and the effect that is having on the markets.
There's no doubt that confidence is high.
Yeah.
You can just see it in the US market. The really interesting thing that he wrote about was in talking about pent-up consumer spending, and it seems like there's a lot of it at the moment in the US. The average income in the US was actually higher in 2020 than in previous years, and that's including job losses because of COVID. But between the broad stimulus checks that a lot of people got and a lot more people than expected keeping their jobs, 2020 was actually a good year for incomes, which surprised me.
Very surprising,
And then, obviously, especially in the States, there's so much pent-up consumer demand, no concerts, no live sport. It's starting to come back now. But so he expects a real flourishing of the consumer economy and consumer spending. And if you think about Australia and the earnings season we've just lived through, you can see that the consumer spending was strong. Retail stocks enjoyed COVID more than one would have expected.
Absolutely. I mean, what we've run out of TVs in Australia, haven't we? So yeah, look, he's overwhelmingly positive, I guess, about, well, not overwhelmingly, but he is positive about the general health of the economy and the way that's ticking over. Ren, to your point, consumer spending and consumption over 2021, he expects to be quite strong. You'd think the same here in Australia as well. And that's probably all underpinned as well by the stimulus that's coming through from the governments, as well as central bank decisions, and the real confidence again that is giving markets with all this money flowing in, and not only directly into the pockets of people. I think 1,400 over in the States now just signed off, but also the quantitative easing that's going on by central banks over in the States as well, providing a big backbone to the market.
Yeah, so that's, I guess, the positive side. He then discusses the negative side and, the view that things may not all be okay in 2021.
Yeah.
There was one big headline that he's not new in talking about it, but he really unpacked the risk, which was inflation.
Ooh.
So what was he talking about there?
Well, he's obviously wary that inflation is, potentially around the corner, but also the risk that has on, the relative returns of, when you're looking at bonds versus stocks, and what could happen with the interplay between both. If inflation starts to rise, then central banks start to increase their interest rates, and then I guess if you're looking at it from a relative basis, the impact that'll have on people trying to still beat inflation and move their money away from the higher end of the market, those sort of growth stocks, and into, I guess, some bonds that are going to be beating inflation.
Yeah. I mean, look, the Fed has said that they want to keep rates low for a long time, but if inflation gets to 3%, say, bond yields of 1.5% just aren't going to cut it.
No.
So it'll be an interesting situation to see play out. I think we can keep talking about it, but let's jump to the conclusion. So then he talks about how he suggests investors invest in light of this, I guess, the divergent views of what could happen.
Yeah.
So what are some of the headlines in terms of how he thinks we should be investing?
It's like at the top of a black ski run. Proceed with caution.
Proceed with caution, yeah.
Yeah, I mean, he's obviously saying that at the moment, you need to be investing, and money in the market is obviously a good thing compared to where it could be elsewhere. But by all means, sort of proceed with caution was the overwhelming message, and just keep an eye on things.
Yeah. The one asset class that he said he wouldn't be investing in, obviously none of this is advice, we're just echoing what Howard Marks is saying, but the one asset he wouldn't be investing in is long-dated fixed income assets.
Yeah.
And that's to that whole inflation point. If you're getting 1.5% for the next 10 years, it's not great.
Yeah.
And then three asset classes that he thinks investors should be looking at: inflation-linked bonds, so floating rate bonds, the infrastructure,
Property.
Or infrastructure and property, where they have pricing power and they can increase rents or increase rates. And then thirdly, stocks with pricing power that can pass on increases in inflation onto consumers. So really a proceed but beware of inflation conclusion to the memo.
And is that how you're thinking about things?
That's, me and Howard always see eye to eye on this stuff.
Nice. And I think we might unpack some of that a bit more in the podcast because there's a lot that we could go through there. So, but before we close out the episode, Ren, look, we did say that we're going to talk about the auction that kicked off the deep learning revolution. This is quite an interesting story that took place down at Lake Tahoe in America and involves some of the biggest tech players in the world and potentially someone that not many people have heard of.
Yeah, well, this was just a really interesting story that I didn't really know much about.
Yeah.
But deep learning, we've heard about it now, but it wasn't, so it was first posited in like the 1950s or 60s.
Yeah.
And by the early 2000s, it was considered scientifically impossible. It was considered, you were sort of looked on with scorn if you were a researcher and you were talking about deep learning or neural networks or anything like that. And then one researcher from the University of Toronto, Jeff Hinton, name that not many people have come across, cracked it. Him and two researchers in Toronto figured out the first, working deep learning algorithms and basically could get computers to think. And in 9 pages, I think he, told the world what he managed to achieve, and of course, overnight was fielding calls from the Microsofts, the Googles of the world, all pitching to him to come and work for him and his students. But I think his students took another route and said, "Hold on, we should make a company from this." Yeah. They created a company. So this was in 2012, so not that long ago.
Not that long ago, yeah.
Created a company with no product, no revenue, just
his
research, and two researchers and him, and then started a bidding war with Google, Microsoft, Baidu, which is China's answer to Google, and DeepMind, which was a AI startup at that time. Massive bidding war ensued.
Epic.
Price went from $12 million to $44 million over the course of a couple of days. The Baidu and Google were the two that were really going hard.
Yeah.
Eventually, the bidding abruptly stopped. He put the auction on hold and decided to sell himself to Google.
Yeah.
Complete speculation, but it's
watch what you say.
The fact that it was a Chinese company and an American company in America, and they were bidding. The bids were in America. This researcher was Canadian.
Yeah, it's not getting out.
It felt like maybe there would have been some pressure to not sell this groundbreaking technology to China, but that is pure speculation, I must say. But anyway, sold to Google to $44 million.
Yeah.
And then what it really has sparked is the past 9 years of this AI revolution. This story that I didn't know about, and I'm sure a lot of people haven't heard about, but now every company is talking about AI, talking about machine learning, talking about deep learning. Google has now got the most AI experts per
They
square
bought
meter
DeepMind.
in the world. Yeah, they bought DeepMind in 2014. They're really leading the charge. But Microsoft, who was involved in this bidding war, have also joined the arms race. They've invested a bunch in this sector. They've partnered with OpenAI and a bunch of stuff. All the other tech players are following along. China obviously has responded to the call and is doing their own research and doing their own work on that. And we're really only at the start of what is fast becoming an arms race. But for me, the fascinating thing was this was something that for 60 years or 50 years was considered scientifically impossible.
Yeah.
And, this guy, Jeff Hinton, never heard of him, cracked it.
Yeah.
And we are where we are now.
And I feel like he's come. Well, I don't know what he's doing now, but I feel like 44.
I would guess still working at Google.
You would think so,
Yeah.
but 44 million, I feel like he could have done a little better. But had that auction continued to keep going the next day. But look, who knows? We'll leave it at the point of high speculation.
What would you have bid?
Well, if I had more than 40, I just feel like from where. 9 years ago, sure, $44 million is a lot of money, but from what that's going to create long term, it's probably return on investment for Google. I think is going to be significant. Well, that is all we have time for today on Equity Mates. Thank you for joining us for another week. It's been an absolute pleasure. We've always loved chatting about stocks and to our experts. Hopefully you've managed to get something out of it that will help you on your investing journey. But Ren, as always, it's great to chat stocks. We'll be back next week.
Yep, back next week with more of the same, more talking stocks, more expert interviews, and more breaking down industries as we continue on our investing journey.